Hi everyone, it's Ashur here. So today's video is the one which we might want to come back to in future and see how it has been a total success or how it has been a complete failure. You see, I want to discuss the investing practices when it comes to stock market, what is the best practice and how you can use that to further your interests. Now please note, I'm not a licensed financial advisor and it literally has been just a few months that I started investing properly. So please consider what I'm about to say in the spirit of entertainment and do your own research before making any investing decisions. With that being said, let's jump right in. So there is a pandemic going on, industries are down, unemployment is high, and there are protests all around. All these factors should actually push the stock market down, but we are seeing something completely opposite. So S&P 500 had the greatest 50-day rally in the history of this market capitalization weighted index. It returned 37.7%, making it a benchmark for the future. And if history is to be believed, we can expect further gains in the coming days. Now, companies on Toronto Stock Exchange have been performing well too, some of them witnessing a healthy gain of 45% in the last 1 month itself. All these things feel like the bull market is here, but we cannot be certain that the prices will continue to rise. So did we just miss the biggest rally? And now what should we do? Should we just now wait patiently for the market correction to happen and then invest when the prices come down? Needless to say, there is a lot of confusion out there and it has caused the market to become extremely volatile. Prices of stocks have been going up and down in the matter of hours, if not days. I'll give you an example. Hertz, an American car rental company, declared bankruptcy around 3 weeks ago. At that moment of time, the stock of the company was around 53 or 56 cents per share. Investors saw this as an opportunity to buy the stock at a reduced price, and in doing so, they rallied up the stock price all the way up to $5.53. Now, just to give you perspective, if on May 22nd you would have bought $10,000 worth of Hertz stock and sold it on June 8th, then your investment would have become $98,750 by the time you were done with it. Now, Hertz is not the only company which has seen a dramatic rise. As a matter of fact, a report by CNBC suggests that the price of penny stocks have increased by 80% on average in the last week itself. The current market dynamics has created an absolute feeding frenzy for the day traders, with some of them making insane amount of profits and going on to claim that they are better investors than Warren Buffett. So with all this going on, it's not uncommon for people to try their hands in day trading in hopes of making a quick profit. But the reality of it is that only a few succeed while most of the day traders lose money. You see, it's not a sustainable model of investing. Actually, I won't even call it investing. This is more like gambling, where you're trying to predict the market and risking a large sum of money to make daily gains. Unfortunately, no one knows for sure that in which direction the market is going to go, and in situations like this, you are more likely to lose money. There is also a psychological factor involved when it comes to timing the market, and it makes it extremely difficult for novice traders to control their nerves. Let's say, for example, you look at an appreciated stock A. The stock has increased 50% in value, and now you're feeling confident about the stock and you want to buy it, but you tell yourself that you're going to buy it when it comes down a bit in price. A few days later, it reduces in price to its original value, but now it also has that red line showing negative returns. You look at that red line and suddenly all the confidence that you had for this stock is gone. You look at other stocks' performance and there is a high chance that the entire market is down. At this moment, you tell yourself that the entire stock market has crashed and everything is doomed. You hold on to your hard-earned money and you thank God that you did not invest any of it in the stock market. But the truth is that after a few days, market is going to correct itself and it's going to go up and you would have missed on some healthy gains. Time in market is always going to beat timing the market. I cannot emphasize enough on this point. The only possible thing that you can do which will assure you guaranteed returns is to invest continuously in a blue chip stock over a long period of time, 30 years or more. So all you need to do is set aside some money, no matter how little, and keep investing regularly month after month. Initially, you can have an aggressive portfolio, and after years of continuous investing, when you are 5 to 10 years away from your planned retirement, you can change your portfolio from an aggressive to a non-aggressive one and then avoid the risk of losing the money. In Canada, you can trade stocks for free using apps such as Simple Trade. There are no brokerage charges and there isn't any restriction on the number of trades that you can do. Also, as an incentive to use their app, Wealthsimple offers $5 as a signing up bonus. I'll put a link to that in the description below for your reference. And in case if you're wondering that how investing a small amount of money is going to help you in the long run, then let me assure you that even something as small as $20, but if invested on a daily basis, can get you to a very comfortable position come retirement time. And this $20 you can save it by just cooking lunch and having coffee at your home instead of buying it from outside. So let's say you're 30 years old and you plan to retire at 60. You invest $20 on a daily basis, which is $600 monthly in a blue chip stock or a broad index fund. At 10% average rate of return compounded annually, you can expect to have $1,184,705.95 when you retire. And if you had all this money in a TFSA, that is tax-free saving account, then you don't even have to pay taxes on your gains. And if you don't know what a TFSA is, then don't worry, I'm going to make a detailed video on that very soon, and I'm probably going to link that video somewhere here for your reference. Anyway, I hope now you have some idea about investing, and if you are someone who hasn't started investing yet, I will suggest and I will strongly recommend that you start as soon as possible. Trust me, you're going to thank me later. Also, if you enjoyed this video, then please do not forget to like it. It really helps with the YouTube algorithm. And if you haven't subscribed yet, then please go ahead and do that so that you do not miss out on any of the new videos that I will be posting. With that being said, thank you so much for watching, and until next time.
Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles.